Welcome to the Aether Vector. I'm Maverick Adams, and this is where we decode the intersection of finance, technology, power, and knowledge. In every episode, we'll explore the structural shifts shaping our economy, from payments and venture banking to artificial intelligence and capital markets, and the leadership decisions that determine who thrives in this new era. Today, in our very first episode, we're looking ahead to the future of venture banking, payments platforms, and AI in transition. We're living in a moment where payments, venture banking, and AI aren't separate conversations anymore, they're converging. And when systems converge, power shifts. This collision is redefining how capital flows, how companies build platforms, and how innovation moves from idea to scale. This episode opens the series by unpacking that convergence, what's driving it, what it means for financial ecosystems, and what kind of leadership it will demand. Over the last decade and a half, I've worked inside the core of that transformation across payments, fintech, and AI innovation inside Citi and other global institutions. I've helped build fintech startup units within banks, manage multi-million dollar innovation funds, and create partnership ecosystems that brought emerging products to market. I've worked on machine learning models that cut fraud losses by double digits and applied generative and agentic AI to everything from regulatory compliance to marketing transformation. That experience gave me a front row seat to how real innovation happens, not in theory, but inside regulated, complex environments where risk, regulation, and ambition collide every single day. We've reached a turning point. Payments are no longer plumbing in the background, they've become the backbone of growth. From embedded lending to digital wallets scaling across Latin America, payments now decide which platforms thrive and which ones fade. At the same time, artificial intelligence is reshaping every layer of finance, from fraud detection to personalization, but it's doing so under the watchful eye of regulators and risk officers. The challenge isn't whether banks and fintechs will use AI, it's how they'll deploy it responsibly and who will define the guardrails. And beyond that, venture banking and capital are no longer about funding alone, they're about platforms, ecosystems where technology, regulation, and capital flow together. Leaders who understand that intersection will shape not only their firms, but the economy itself. That's what the Ether vector exists to explore. Because payments, AI, and venture platforms aren't just trends, they're tectonic plates shifting beneath the surface of global finance. My goal is simple: to unpack these forces with clarity, context, and candor, and to have the kinds of conversations that rarely happen in public. If you care about where technology and finance meet and what happens for the next generation of innovation, you're in the right place. When we talk about innovation today, most people jump straight to the shiny things: artificial intelligence, blockchain, machine learning, generative models. But if you peel back the layers of nearly every successful business model that scaled in the last decade, from global e commerce to embedded lending to digital health. There is a common denominator sitting quietly underneath: payments infrastructure. For too long, payments were treated as back office, a cost center, something you plugged in after you built your product. That thinking is obsolete. Today, payments are the strategic backbone of growth. The design of your payment architecture determines not only how fast you scale, but how you monetize innovation, manage liquidity, and engage your ecosystem, from customers and suppliers to regulators and investors. The moment you can move money efficiently, securely, and contextually, you unlock new business models: embedded finance, instant credit, decentralized marketplaces, cross border ecosystems. All of them rely on payments as the first layer of trust. And nowhere is that more visible than in Latin America. In many ways, LATAM has become a proving ground for the future of financial innovation. When legacy rails fell short, entrepreneurs and regulators didn't wait, they built. From Brazil's Pix, which achieved mass adoption in record time, to Mexico's Cody, which struggled with scale but offered valuable lessons about consumer incentives and interoperability, to Argentina's digital wallet boom and Colombia's alternative lending networks, Latin America became a live laboratory for what's next. Limited infrastructure forced creativity, and that necessity produced systems now leapfrogging legacy architectures, setting the global pace for embedded payments, API driven credit, and digital liquidity. For venture bankers, strategists, and founders, this isn't just a regional curiosity, it's a signal. Payments innovation is no longer a downstream support function, it's an upstream growth enabler. The firms and ecosystems that invest early in payments architecture will be the ones defining the next decade of venture and fintech growth. In this episode, I want to pull that thread: how payments, data, and connectivity are merging into a new operating fabric for financial and non financial enterprises alike. Because whether you're building a startup, running a multinational, or shaping public policy, your ability to move money efficiently is now your ability to compete. But if payments are becoming the backbone of modern finance, the accelerator, the force that's pushing everything faster, is artificial intelligence. But if payments are becoming the backbone of modern finance, the accelerator, the force pushing everything faster, is artificial intelligence. AI isn't just hype, it's already changing how financial institutions manage risk, detect fraud, and personalize client experiences. It's helping analysts see anomalies before they become losses and giving relationship managers data driven insight into what clients need next. The technology is no longer a futuristic concept, it's in production today, embedded inside the workflows that quietly power global finance. Yet, the risk is real. Overhype versus practical adoption. We've all seen headlines promising total automation and trillion-dollar efficiencies. But inside regulated environments, the reality is more disciplined. Progressive pilots, model risk governance, and explainability requirements that make innovation both slower and safer. The firms that win are those that balance boldness with control, deploying AI where it matters today while laying the groundwork for what will be possible 3 to 5 years from now. In the near term, that means using AI to optimize what's measurable, operational reengineering, liquidity forecasting, compliance analytics, intelligent documentation. Over the next 3 to 5 years, it means scaling from automation to augmentation, embedding intelligence directly into client interactions, credit decisions, and treasury optimization. That evolution requires not only technology, but executive willpower, a leadership mindset that treats AI as a strategic capability, not an experimental project. And that brings us to a deeper truth. In finance, innovation rarely fails because of technology. It fails because of execution. Because in a world governed by regulation, risk, and reputation, the question isn't simply what we can build, it's how we build it, and how fast we can scale it responsibly. Yet, even with payments and AI reshaping the industry, the real challenge isn't just innovation, it's execution inside regulated environments. And that's where platform building becomes both difficult and decisive. In venture and growth banking, platforms, not just capital, are what separate the transactional lenders from the long-term partners. A true platform connects founders, venture capitalists, limited partners, and financial institutions into one living ecosystem. One that doesn't just provide funding, but insight, mentorship, and infrastructure. The best banks aren't just financing innovation, they're engineering it. But in regulated industries, building that kind of ecosystem is not just for the faint of heart. Regulation is both a brake and a moat. It slows experimentation, but it also protects incumbents who can execute with discipline. Those who navigate compliance, credit, and conduct rigorously don't just survive, they lead. Because when you can innovate and stay in full control, you earn trust, and trust is the ultimate competitive advantage. The leadership challenge, then, isn't to chase speed for its own sake, it's to create velocity with integrity, to build platforms that move fast but stay sound. That means pairing venture style creativity with bank grade discipline, creating a space where a founder can talk about new market models in the same breath as a risk officer can discuss Basel requirements. It's not either or, it's both and. When you can do that well, regulation becomes the scaffolding for scale. It ensures what you build can last beyond any single funding cycle, leadership team, or macro trend. That's why platform builders, whether inside banks, fintechs, or hybrid ventures, must think like architects of ecosystems, not just operators or transactions. We've seen this mindset emerge in payments, lending, and now AI. Venture bankers who connect their clients into broader digital infrastructures, APIs, data networks, innovation labs are quietly rewriting what banking means. They're turning compliance frameworks into corridors of growth, and they're making banks relevant to the next generation of founders who expect partnership, not bureaucracy. And it's in this convergence of regulation, innovation, and execution that the future will be decided. Because anyone can deploy technology, but very few can build trust at scale. That's the art and science of modern venture banking. Building platforms that are fast, compliant, and human centered all at once. So when we put these pieces together, payments as the backbone, AI as the accelerator, and platforms as the test of execution, we start to see the future of venture banking and financial services in a very different light. So let's bring it full circle. Payments are no longer back office. They are the backbone of growth. Artificial intelligence is not just theory. It's the accelerator forcing financial institutions to rethink how they manage risk and deliver value. And platforms built in regulated environments are the proving ground for leaders who can balance innovation with control. This podcast exists to decode those shifts. My goal is not just to talk about technology or finance in isolation, but to explore the junction where they collide and to help make sense of what those collisions mean for the future of banking, venture capital, and the broader economy. In the coming episodes, we'll dive deeper into the mechanics of embedded lending, into case studies from Latin America and beyond, and into the leadership questions facing executives at the center of these transitions. I'll be bringing in voices from across the ecosystem: investors, technologists, policymakers, to help illuminate the forces of change from every angle. If today's conversation resonated with you, I invite you to subscribe, share this episode with colleagues, and connect with me on LinkedIn. This is just the beginning of what I hope will be an ongoing dialogue about how power, knowledge, and capital flow in the 21st century. Thank you for joining me on this first episode of the Aether Vector. I'm Maverick Adams, and I look forward to continuing the journey with you.